This is what Bitcoin does. It's done this many, many times. It goes up, it goes down. Long-term believers call it, do what's called hodling, which is holding on for dear life because it's so volatile. There's nothing fundamentally different about Bitcoin today than Bitcoin yesterday. The best analogy I use, if you go take a look at Amazon, Amazon was up 70x from 98 to 2000. Now, was that a bubble? Did it get ahead of itself? The next 2 years, it was down more than 95%. That's Amazon. And so was that a bubble and a crash? If you look at Amazon today and you look at that, in a 20-year price graph, that up 70, down 90%, that wasn't a bubble in the context of where Amazon is today. That's just this tiny little imperceptible blip. And in 20 years, when we look back at Bitcoin and we look at the rise and the fall that's happened over the last couple of years, it's not going to be a bubble and a crash. It's just going to be a blip. I think, again, similar to what happened with the internet, 98, 99, 2000, people who made money on the way up during that bubble, the bankers made a ton of money, the lawyers made a ton of money. That's what we're seeing today. Lawyers have made a ton of money in crypto. And some people got in and got out and made a lot of money, but most of the people who are in this for the long run. And, if they're down, if they got in the last year and they're down, if they leave, they never really believe. But if you believe, if you saw the crypto light, you see the same thing that I see, and I know hundreds of thousands of other people see, you're in it for the long run, and the price decline over the last couple of weeks or all year is really, doesn't have any impact on our long-term thinking. Well, I think the ICO market has been in market decline for the entire year. And what we have now is we have returned to investing in equity like has always been. And so that's what's going to drive crypto forward. And the right way to think of coins in our view is just simply the same way we look at frequent flyer miles. It's just a way for companies to incentivize people to use the product, use the service, add value to the ecosystem. Regulators have two choices. They can roll out the red tape or they can roll out the red carpet. And they roll out the red tape at their own peril because this is happening. It doesn't matter what the regulators do. The regulators in China don't allow Google in. They don't allow Facebook in. And would Facebook and Google be bigger if they were in China? Of course they would. But they're still massively, massively, massively valuable company. So regulators, are not going to diminish, are not going to stop this from happening. Asking where the bottom is like asking what's the weather going to be in a year. Nobody has any idea. It's going to bottom when it bottoms. It's bottomed every time before and risen from the ashes many, many times, or from what people said was the ashes. So for people who've been in it for a while like I am, I hope it goes up today. I hope it goes up tomorrow. But I have no doubt in 20 years, it's going to be markedly higher than it is today. And so that's really the outlook that we have. We're not trying to guess where Bitcoin is going to be in 5 minutes or 5 days, but we're looking out, 5 years, 10 years, 20 years. I think the future couldn't be brighter. I believe this is the biggest thing to happen in the history of humanity. There's something called Amari's Law. Amari was a professor at Stanford in the 70s when he coined the phrase. And Amari's Law is the simple fact that the impact of all great technological change is overestimated in the short run and underestimated in the long run. That's why you get bubbles. That's why you get crashes. But in the long run, the people who make the most money, the people who get really wealthy, are the people who buy and hold for the long term.